Hey, Steve here. I hope you are doing well this morning. I want to talk about an article. This guy, Jeff Greene. I'm going to talk a little bit about his background, but also I want to first start off talking about mortgage interest rates. I think that, and I brought this to some people's attention early on, talking about pre-pandemic, what the real estate market was doing. And again, every real estate market's different, but here in Southwest Florida, our real estate market was just kind of limping along. I had my own personal properties that I had on the market. They were sitting on the market for months at a time, and some of which were just extremely difficult to sell. And I had to keep dropping price. And some of these properties that I had, they were premium properties, and beach properties, and they were just difficult to sell. This is pre-pandemic. And I want to talk about mortgage interest rates for a second real quick. So basically, if we look at this, we can see pre-pandemic January 2020. Hopefully you guys can see this, and I promise I'm going to get a better camera for these live streams. Pre-pandemic January 2020, mortgage interest rates were 3.72. Okay. So, as mentioned, our real estate market here in Southwest Florida was just kind of limping along, and mortgage rates in January 2020, before shit hit the fan, 3.72. Now you can see where it bottomed out about a year later. January 2021, we were at 2.65. And now you can see where we're at today. Based on this chart, it's showing 5.27. And I looked at Mortgage News Daily, and we're at 5.4% today. So I'm just trying to utilize some common sense thinking about the real estate market. And I came across this article, and it is very compelling. We're going to get into it. So, but again, I just look at charts like this. Mortgage interest rates, 3.72 about 2 years ago in January, before everything hit the fan, and our real estate market was just limping along. And now we still have, in some markets, multiple offers, people still being crazy, buying properties at crazy high prices. And now people are paying, 2 points higher than before the pandemic started for mortgage rates. Not to mention 2 points higher for mortgage interest rates, but they're paying several hundreds of thousands, if not millions of dollars more in purchase price right now. So I just wanted to kind of do the common sense kind of feel things are not adding up. And I think people are just emotionally driven over these last 2 years of, man, I still have this FOMO. I still got to get into the real estate market. I still got to, buy a house. And I don't know if you guys looked at the video that I launched yesterday. It was my own personal experience, my own story of the last housing crash. If you've not checked it out, I'd appreciate you checking out, because it's basically just kind of what I went through personally, and had some devastation, and it sucked, but it taught me a lot. And, I just look at where we're at today's market and where we're at with prices and interest rates and inflation and everything that's going on. And I'm astonished that, where we're at today with pricing and everything. And I will be sure to answer any questions. If you guys have comments toward the end, I'm going to review everything that you guys are chatting up here as well. So I appreciate the support too. But let's jump into this article. Now, it's not what you think. What I want to do is, I'm studying not just current day articles. Current articles from mainstream media, they're giving you information pertaining to pretty much what's going on right now or what has happened. They're not giving you any kind of what's going to happen in the future. So it led me to start looking at articles and videos that came out by prominent people that came out, say, a year ago. And I came across this one by Jeff Greene, Jeff, Greene. He's a billionaire real estate investor. Hang on one sec. If you like this mug, let me know. All right, that was a gift. All right, so Jeff Greene, he's worth 5.1 billion according to Forbes. And again, I'm going to get into this article, and the article came out a year ago. So we're going to see what he predicted a year ago where we're at today. He became a billionaire by buying credit default swaps on subprime mortgage-backed bonds as the housing market crashed, the last housing market. So he basically was predicting, yes, there's going to be the housing boom, and there's going to be a crash. So he made a big fortune doing it. Most of his fortunes are now held in equities and other investments, plus real estate in Los Angeles and Palm Beach. He actually resides in Palm Beach, Florida. He spent $30 million in the summer of 2018 trying to unsuccessfully win the Democratic primary for governor. And this guy, he appears to be just kind of an average Joe. To pay for college, he relied on scholarships, loans, and part-time jobs. He checked IDs outside of a gym and library to make extra cash to pay his way through Harvard Business School. He traveled the country selling circus tickets. He bought his first house as an MBA student and rented out rooms. By the time he graduated, he had 18 properties. He's very charitable. He gives a lot. He actually has a high potential school in Palm Beach as well. And before I get in the article, a very good quote. It's pretty cool. I once was part of the 99%. I never thought I'd be part of the 1%, but just the fact that I could try to achieve that was motivating. That's what this country is all about. I think that's an excellent quote. All right, so this article, I got it linked in the description. So if you guys have the time, go ahead and take a look at the article. Now, the article came out April 16th of 2021, and this is basically what his predictions are moving forward. Again, I wanted to, and I'm going to continue doing research on other people that are bright people. You know, if you're a billionaire and you shorted basically the last real estate market, you know, you saw that coming. You probably had your thumb on the pulse. And anyway, I'm following more and more economists and more millionaires and billionaires related to the real estate sector and really getting different perspectives. And I'm just going to keep doing this, but also I'm going to keep researching a year in advance, maybe even 2 years back, as to what others have predicted for the future and to see if they're right or wrong. And this guy, I think, is on point. The article says real estate investor who shorted subprime mortgages says this housing boom is in a bubble too. He told CNBC on Friday he believes the current housing market is in a bubble. He says, absolutely, I think we're in a omni bubble. How long does it last? It depends. How long do you keep the faucet open and this money running? Again, this is back in April 2021, where the U.S. government was still buying $40 billion worth of mortgage-backed securities and another like $80 billion of other treasuries. So, and not to mention all the stimulus money and money printing and everything else that's going and flooding into the market. But let's talk about this for a second. I predict basically along the lines of what this guy's saying as well. But there is something that could deter our real estate market and continue things going up. And is if the Fed doesn't do quantitative tightening, and if the Fed brings down rates, but at this point in time, their backs are up against the wall. They're trying to fight inflation, so they keep increasing rates, and they are tightening on their monetary policy. So they're trying to get their balance sheets right, and I predict that's the ongoing trend, and hopefully it stays that way, because if not, it's just going to make things aggressively worse. He goes on to say there's just so much money in corporate balance sheets and people's balance sheets and their bank accounts that it's just driven prices of everything higher. But at some point, this has to stop. And comment in the section below, like it was a matter of time. It was a matter of time before this just manipulation of everything that the Fed and the government has done to our economy. And unfortunately, it's going to have devastating consequences. And I got I'll probably do another live stream tomorrow on it. I have the articles printed out. But these Chinese developers that they're losing buildings and they're losing properties in Manhattan. And I think it's just going to be a series of waves of more and more developers just they're insolvent and they're going bankrupt. And they're trying to restructure, but lost cause. So I'll probably shoot for a live stream on that tomorrow. Greene is not the first person to suggest the market is overheating, although his previous bet against housing market in the mid 2000s makes his comments on Friday notable. Obviously, I mean, again, if you're basically predicting the last housing crash and you profited greatly, you probably want to listen to this guy. When you see prices go way up, when you see prices go up the way they've gone up, you have to ask yourself, why did this happen? Condemning the robust monetary and fiscal policy response to the pandemic played a key role. My view is it happened 80% of extraordinary amount of liquidity in the economy, again, manipulation of that, and 20% of fundamentals. The investor also pointed to rising costs of lumber, suggesting significant inflation will show up throughout various parts of the economy as it recovers from the crisis. And now I got a chart. I'm going to show you this in a second. I think we're going to have inflation that no one is forecasting whatsoever, and it's going to lead to much higher interest rates, and that is going to slow all these markets down. Again, I'm going to read that one more time. I think we're going to have inflation that no one is forecasting whatsoever, and it's going to lead to much higher interest rates, and that is going to slow down all these markets. Now, I pulled up an annual inflation rate chart. Excuse me a sec. By the way, I really appreciate you guys being on this live stream today, and it means a lot. And if you're getting any value, I appreciate you hitting that thumbs up. If you're not a subscriber, consider subscribing, because I'm going to continue to just bring you guys real estate news. All right, annual inflation rate. Check this out. This is compelling. Again, this article came out April 2021. Okay, look at this. Look at the annual inflation rate in April. Okay, 2021. We got 4.2%. And obviously, if you look at where we're at today, 8.5%. All right. I thought this was very compelling, because if you go back to his quote, his line back in literally April 2021, nobody was talking about inflation, but this guy was. He knew that if there was going to be a ton of money printing, that we would have inflation. There's very few people that were on mainstream media talking about this, and he's one of the few. Again, he said, I think we're going to have inflation that no one is forecasting whatsoever, and it's going to lead to much higher interest rates, and that's going to slow down all these markets. All right. This is kind of funny too. So it goes on to say, not everyone shares Greene's view on the housing market being in a bubble. Now we got Coldwell Banker real estate CEO Ryan Gorman. If you watched one of my other videos that I did on this guy, as well as the CEO of Century 21, I linked both of those videos down below as well. He said, I know there's a lot of concern about potential speculation out there, but that's really not what's happening in the market today. Now, I did two videos because both of these, I call them the real estate cheerleaders. Both of these guys, Ryan Gorman, the CEO of Coldwell Banker, and the CEO of Century 21, whatever his name is. And I did videos on those guys talking about just the FOMO that they're continually pushing. The videos that I did videos on literally came out within the last week, 2 weeks, 3 weeks. And they're still saying strong words like the velocity of real estate and, the huge demand for real estate. And, I had to position my thought process on what they're feeding mainstream media. And if you're only getting your information from CNBC or Fox News or whatever the case is, and you listen to these yahoos, you're getting that narrative of, oh shit, man, I need to run out and buy a house before all the houses are completely gone. And that it's just unfortunate that they're putting out that kind of information. And yeah, I mean, a year, back in April of 2021, if you bought real estate then, and you're sitting right now with a piece of real estate, you probably could profit, and you could probably profit pretty well. So this guy, Jeff Greene, wasn't necessarily saying like, don't buy real estate right now. He was just saying, we're headed toward a bubble, and eventually that bubble will deflate, go down, crash. Who knows? Time will tell what will happen with that. One other thing that I want to touch on is since 2020, since March of 2020, obviously interest rates went down tremendously, down to 2.65% in the lowest in January 2021. So people are doing everything they can to lock in cheap interest rates, which I think that there's a lot of people that benefit from that. If you bought right before prices just went insane and you got in at a very low interest rate, even if you decide to move out of that property or sell that property, I would suggest taking a second look at that property and potentially keeping it for the long term, keeping it part of your portfolio, because that cheap debt that you have is actually an asset, assuming you're renting it out and cash flowing. So I wouldn't be so quick to sell property that I bought right with very cheap debt. If you guys can rent it out, keep that property if you're intending on moving. Now, households overall add $8.4 trillion in mortgage debt since March 2020. The total of mortgage debt right now is basically 11.2 trillion. So literally in a 2-year period, we had 8.4 trillion in new mortgage debt, whether that was new purchases, refis, cash out refis. Now I want to do a video on the cash out refis. I haven't really looked into the data there, but I think that the data is going to show a lot of people took advantage of the refinancing, but I don't think a lot of people did. And let me know in the comments below if you guys think this. I think a lot of people did. A lot of people were not necessarily savvy. Instead of like, all right, let's say they owed $200,000 on their mortgage and they're previously in a 4% interest rate, and let's say they had 26 years left on that mortgage. Instead of doing a refi into like a 15-year mortgage, no cash out, I think there's a small percentage of people that did that. If you did that and you guys reduced the amount of years, didn't do a cash out refi, got into a really nice 15-year fixed interest rate debt, I'd like to hear about it in the comment section. But I think that we're going to see that a lot of people utilize their home as an ATM machine, and the guy or girl or family looked at, okay, they owe $200,000 on their home. Their home's now worth 400. They cashed out refi maybe 150 grand because they wanted to pay off credit card debt. They wanted to pay off car debt. They wanted to put a pool into their house. They wanted to build a deck off of their house. They wanted to do all these things with the cash. And I think that's going to hurt a lot of people because, unfortunately, I believe the real estate market will come down in value. So the people that were at a $200,000 loan, now they're at $350,000. And if the market goes down, and for some reason, due to job relocation, death in the family, divorce, any bad things that happen, they're going to be potentially forced to sell, and they're looking at their current debt position. They're like, shit, I owe $350, but now my house is worth $340. And now you might be thinking, I got to come to the table a check for 10 grand, but you're not taking into consideration closing costs, and closing costs are costly. If you got real estate closing costs, you got title related closing costs, you got state doc stamps on the deed here in Florida anyway. So you got a significant amount of closing costs, not to mention money that you put into the property, not to mention moving costs. So I think a lot of people are going to be in trouble there if they have to sell. Excuse me again. Great mug, right? And anyway, I need to do a lot more studying on the cash out refi to see really how much people max that out, because just being in the real estate industry for as long as I have as a real estate broker and investor, anytime I was working with buyers, majority of times they would get approved for 300 grand maxed out, and they're looking for that max amount for a purchase price instead of saying, you know what, let's look for homes for 200,000. Obviously the market's different now, but just using that as an example, I mean, it people just overextend themselves, and that's one of the reasons for this channel as well. I just want to really get the word out of, right now is the time to get out of the consumer debt. With the Fed raising rates, it's consumer debt, credit card debt, it's all going to increase in value. All right. I think I just spit all over my laptop with coffee. I need to stop drinking while I'm on these live streams, don't I? C Love, good morning. Michael August, I only got one offer on my house, but I took it, 107,000. Nice job, congrats. 107 in your pocket, awesome. Good morning from Nashville, Pamela. How's your real estate market going in Nashville? I'd like to hear about it. Socro, you got me scared that I just bought my first home. I mean, don't be scared by your acquisition. It's just, if you got into a good, solid, fixed 30-year, 15-year fully amortized rate, and you guys are comfortable with the payment, there's nothing to be scared about. If you're, job security and everything else, just keep an eye on the job market. I think as we see a recession, I think we're going to come into a recession. You're going to see a lot of insolvent companies surface, especially with the Fed increasing rates. So I'm all about having side hustles and multiple streams of income. So consider looking into alternative ways to make money on the weekends or at nights or whatever. There's so many ways to make money online as well. So consider other forms of making money, and bring down your personal overhead. You bring down your personal overhead, have extra cash to invest when the market takes a dip. Even right now, the stock market, I know there's a lot of people that cashed out and they're waiting on the sidelines to get back in. Warren Buffett, I think that what I said, they have 144 billion in cash on the sidelines, just sitting there waiting. So they're smart. A lot of people are saying about inflation and cash sitting in the bank is so bad and this and that. I mean, yeah, if you're going to keep cash and you're saving cash in the bank for the long term and for years and years, yeah, that's not a good way to park your cash in any sense. But to cash out on certain investments and have it on the sidelines and wait for markets to dip down, I think is a strategy that I'm doing anyway. Where's inventory going to come from to create a crash scenario? I think multiple different ways. We've had a backlog of foreclosures that have yet to hit the market. A lot of shadow inventory out there. I mentioned in another, I don't know if it was a live stream or another video, that if you basically people that just walked away from houses, what happens is, and we've helped people avoid foreclosure by doing short sales. Hundreds and hundreds of people help people avoid foreclosure. But basically, if people walked away from their homes, the bank is going to send somebody out to circle around that property, see if it's vacant. If it's vacant, even if they have not gone through the foreclosure process, these lending institutions, they're going to send out an asset management company, and they're going to secure that asset. They're going to make sure that there's no vandalism. They're going to clean up the property. They're going to mow the grass. They're going to insure the property. They're going to make sure it's secure. They're going to change the locks. And you're going to see inside these properties, usually at the front door, or maybe inside the garage or in the kitchen, there's going to be a sheet there, a sign-off sheet, and it's going to show when they initially took acquisition of the first inspection. And every time that person goes in to inspect, whether it's weekly or bi-weekly, they're going to date and basically put their name as to when they went in there. And I guarantee, mark my words, a lot of these foreclosures that are going to surface and come to market, you're going to see that sheet dated back several years back. So I think that we have a lot of inventory out there. I did another video on that Reddit article. Oh, man, that is some scary stuff. It's not really being talked about much right now, but keep an eye on commercial mortgage-backed securities. It's scary. it's very scary. And I think if a lot of that was actually, traditionally commercial mortgage-backed securities are tied to commercial real estate, whether it's big apartment complex, large office buildings. But based on that article, if any of it's tied to U.S. housing, it could be very, very scary based on institutional investors. And, a lot of people think that these institutional investors, they're competing with you guys in your hometown paying cash, but they're not paying cash necessarily. They're taking on a lot of debt and they're taking a lot of short-term debt. And what's happening with short-term debt, it's rising with the Fed rate. So if that short-term debt keeps increasing and their cash flow position on that short-term debt is getting more and more narrow, we might start to see liquidation events occur with institutional investors as well. But again, who knows? Who has a crystal ball here? I don't, but I think things are gnarly right now, and we're going to see a shift. Doomsday vloggers are saying the new home inventory is going to hit the market hard in Q3, 4. Yeah, and I don't want to be considered one of those doomsday people in any sense. I just want people thinking differently and thinking, again, I'm bringing articles from a freaking year ago and seeing what people were predicting. And this guy, Jeff Greene's prediction is coming true. And he's saying things before mainstream media is saying it, mainstream media is coming into the market and saying inflation and this when it's happening. But this guy is saying, hey, a year ago or April 2021, we're going to see rates increase, basically slowing down of money printing, and we're going to see inflation. And he's predicting we're going into a housing bubble, and I think it's compelling. Complete manipulation by local news in Boston, talking about how you have to waive inspections to get the house. That's manipulation. If you're an inspector or contractor, that's fine. I bought real estate like that with no inspection contingencies in the past, not in this market. And I've been in construction and everything else. I've renovated a lot of properties over the years. So I know what I'm looking for, and I've done that to get a better deal, come in cash, no inspection period, close in 10 days. It can help you get really good deals. And that's what I will do coming into this shifting market. But to do that as a regular home buyer for your house that you're going to live in, oh man, who's that? Sherby? I don't know what your name is, but thank you for that. I appreciate that. Michael August, how should I invest $100,000? I don't know. I'm not a financial advisor. Don't take this as financial advice. I'm sitting on the sidelines with cash in hand, and I'm waiting for better deals. It doesn't mean that I'm not making offers on investment properties. I'm getting outbid left and right on things. But it is what it is. But I'm not going to pay crazy prices. Never ever OSO, never ever waive a home inspection. I'm with you. I don't think the Fed will lower rates for a couple years, at least until we see a positive GDP. I'm with you, but I mean, look, relying on the Fed and the government to better your pockets, who the hell knows what they're going to do? But yeah, I think they're going to be very aggressive. I think they're going to continue raising rates, another 50 basis points in June. I mean, if we're over 2.5 points by the end of the year, I mean, mortgage rates are going to continue to jump. I bet we'll see 7, maybe even 8% mortgage rates possibly. Sorry. Cash out is a crazy move. High interest. There we go. The Ford turning 2020 to 2030. Yeah, that's my opinion, 1929. That's a very scary read. I read that book where it appears that we're there for sure. Mike Watson, CEOs are doing damage control. Yep. Those CEOs, they're squeezing it and they're doing damage control because your shares of stock are going down for sure. Loss mitigation. Thanks for being here. Cash out refis was a huge part of 08 collapse. Yep. strategic default through cash out refinance. Man, I've dealt with so many people back then doing strategic default. It was insane. We did a lot of short sales. That's it. Again, I don't want anybody watching these videos. I want you to be prepared, and I don't want to see people sitting at their kitchen tables crying because they're losing their homes. It's bad. And what is it? 50-60% of divorces are because of financial distress. What do you think is going to happen with higher inflation and higher credit card debt? It has skyrocketed over the last quarter as well. So we're seeing, I think people are literally out of money. They're financing their grocery bills. They're financing everything because they still want to have cash to pay rent, to pay their car bills or whatever. I think the writing's on the wall with a lot of people, and it's unfortunate. Mike Watson, I think most maxed out and stayed at home for work, lived off equity. Yeah, potentially. When is the crash this year? Our local market, I'm seeing a lot of back on market. I'm seeing price reductions. Not a whole lot of inventory still. So again, it's patience is so freaking hard. It's so hard being patient, sitting on the sidelines. But I think it's already starting to happen. We're seeing price reductions, properties coming back on market, new inventory. D. Trent, Steve, I cashed out last October, lived in Vancouver, and know all about mega bubbles. Holy shit. Vancouver is a big mega bubble. Prices dropped 150, 200 in the last 8 weeks. Wow, that's telling. Michael Schultz, 300K won't get a 30-year double wide in Vegas. Yeah, who knows? Gotta also look for those areas where the tech industries have infiltrated. I think a lot of people are going to get hurt who work for certain tech companies that bought houses. And so keep an eye on those areas. Even Miami here, they're big with crypto and everything else. And you can see what happened with what's going on with crypto right now. And I think that the Miami market, even though how crazy it's been because of that, that industry and other tech industries going to Miami, I think that we're going to start to see more inventory hit market in Miami. D. Trent, are Canadians welcome? Canadians are always welcome. We have a lot of Canadians in Southwest Florida here. Love my Canadians. About to go under contract for a rental. Found an off-market deal. Otherwise, I'd be priced out. Cool. Sit on the sidelines. Again, in that video yesterday, I talked about my personal situation and tough times. It sucked at times, but we're going to be, once we're out of this place, because we're doing a lease back on it, we're going to rent for at least a year, most likely. I meant your camera. Your camera is out of focus. Sorry about that. I am going to get another camera for these live streams for sure because I'm using my laptop camera. I'm using a better mic, but I'm sorry about that. Good morning from Canada. Any comments on Canadian real estate? I think some already did. Mr. Kilroy, Zillow is biting the pillow. Price decreases like crazy. Garp 1966. Thank you very much, Garp. I appreciate that greatly. Super chat there. Let me know your thoughts on the real estate market, Garp. D. Trent, real estate in Canada has already started to tank. Isn't the Canadian real estate market Toronto prices down the last 2 months? Video Garage. According to Zillow, my house has gone up by almost 3% in the last month. T-Zone R6. Where are you at? And what's crazy is real estate is so micro that, when people come out and they're like, housing crash or housing explosion or whatever, it's so micro. We have communities here in Southwest Florida that are just exploding in value, just like legit PUD, planned communities that there's a frenzy of buying. And then you go, 10 minutes away and you got other areas just completely going down. Hess Jensen, I bought 5,000 cans of tuna in oil. Good call. I mean, we have food shortages going on. Yeah, stock up for sure. Food's only going to get more expensive. In Canada, Yvonne Munyon, what happens when we're in a real estate bubble not being flipped, but can you explain? Look, when we have government manipulation, we have Fed manipulating money supply and everything. It sucks because it'll drive prices up, and then prices will go down if we're in a bubble scenario. So, you know, when the market was just kind of creeping along, it was great opportunity to buy a property at the right price, fix it up, and flip it. And I know some people are still flipping properties. They're even doing just lipstick flips where they didn't have to do much to the property. And I partook in some of those as well. But it's a little sketch right now to flip anything. What happened? The AG World Economic Forum Global Reset. You'll own nothing and be happy. I don't know about that. I always look at my own micro economics for myself and everything else and what I'm investing into, and even emerging markets and outside of the United States. And there's always opportunity for investment. It's just being strategic about it, and buying low, selling high, or whatever the case is. Miss Beth, once the Fed raise rates, how long does it take to come into effect for the rise in mortgage rates? Is it instant or it takes time? I believe it takes some time because even right now we're at 5.4, and they actually went down over the last couple of days, last week, or whatever the case is. So, all right. My opinion, 1929, how high will inflation go? When they talk about inflation, they're not even taking into consideration food costs and fuel costs, which is, I think real inflation is double digit, which is crazy. Erica Williams, Classy Climb, smartphone money. Thank you very much. I appreciate that. Greatly appreciate that. Thank you. Austin, Texas is slightly softening, but holding hard. The Real AG Global Reset. T-Zone, Baltimore, Maryland. Check out Saks Realty. They're in Baltimore, Maryland as well. They got a fantastic podcast as well, and they got a lot of information. I would follow them for sure. How about San Jose market? What do you predict? I don't know the San Jose market. Steve, I stumbled on your channel last night. So funny. Gen X sold for big. Renting for the first time in 25 years. We were patient waiting. You're a very smart person. Thank you very much, D. Trent. I'm taking a risk of selling a property on Bonita Beach here, and the risk more being I'm leaving a place that I truly love. I'm a beach bum. I love living on the beach, and unfortunately, I'm probably going to move inland for a year, and I think other people are on board as well. Thanks, D. Trent. San Jose, California. I'm not too sure. Video Garage, is the beard real? It's real. It's real gray. Multifamily homes particularly, or is there a better market somewhere? I think, I'm in Southwest Florida and things are skyrocketing, crazy expensive. And I think that, there are markets out there that are still affordable. I have other investors that are investing in other areas throughout the United States, and you just have to look for them. And, if you want to buy real estate in a different area, different state, you probably want to buy a lot of them. This way you have, or a lot of doors, or maybe a larger apartment complex. I think Grant Cardone always says like over 16 units or whatever the case is. So this way you can have one manager manage all of them, because you don't want to buy like 2 houses in another state that you're managing, and then you don't really want to hire a manager because then it's not cost effective. So I think that there's always opportunity. Teresa Morgan, thank you very much. That's greatly appreciated. We're heading to Naples next week to buy something in Naples Park or Fort Myers Beach, short-term rental, and I'm considering waiting. It's a retirement house for us as well in 3 years. Very cool. I was talking to my brother, and thank you again for that, Teresa. I was talking to my brother, and he was asking, and he lives in Alabama, and he bought a beach condo, and this is before everything kind of went crazy. And he was asking, am I going to overpay this and that? I was just like, look, if you are overpaying, are you going to be using the property and are you going to be using it now? And he is. And it's, you also have to have a quality of life. And it's like, if you're going to keep a property for the long term, which he is, then, if you overpay, it doesn't really matter. And I explained it to him. I go, if I have a property and I'm enjoying it and or cash flowing it, and I'm in a either free and clear on it or a good 30-year fixed or 15-year fixed interest rate. And if I'm in that property, I'm enjoying it or cash flowing it, I don't care if the property, it could become worthless, right? Let's say I couldn't sell it for any kind of money. It doesn't really matter because I'm getting use out of it or I'm cash flowing it and making money from it. So it just depends. But Fort Myers Beach, Teresa, they are coming down in value. I am planning on buying there again. I've owned a duplex out there on the water across the street from the beach. Awesome spot. But yeah, I'm seeing the 1.2, the $1.3 million properties come down to basically $1,950,000. And I think we're going to start seeing those trends as well. And look, in Florida, I think people, and this is not just Florida, but Florida, you got a lot of older population, and a lot of times they're moving back up north to be with their family because they need help and everything else, or they're moving in with family members because they need assistance. Some of those people are moving into ALFs, assisted living facilities, which is freeing up inventory. And then unfortunately, some of them pass away. The family inherits it. And a lot of times the families do not want, they don't want the aggravation of dealing with it. And what I see a lot, especially like in beach communities here, is you have family members that basically inherited the property, and you have like 2 or 3 siblings that inherit it. And the one sibling's like, dude, I hate Florida. It's too hot, or whatever the case is. I'm never going to use it. And they can't get on the same page to keep it. And then they eventually end up listing and selling the property. In Florida, I got to look at the demographics on that, but I think we have a big aging population that's going to contribute to more inventory over the years. Also, Teresa, my email is info at Steve Invests, INVESTS, info at steveinvest.com. If you want one of my partners to help out, we'd be more than happy to help you out here in Southwest Florida. And again, thank you very much for that. Tomer Klein, Phoenix has slowed down. I have a customer sitting on 2 homes after he dropped them by $50,000. I appreciate the input on that. Erica, what's happening? Have rentals. Thank you very much again. Really appreciate that. Have rentals in Cleveland, Detroit, now only building new construction, St. Pete, Tampa, and Central Texas, affordable housing, but New York, California residents come by it. The rest I build to rent for Florida. Awesome. Tampa market and St. Pete. Well, Tampa has just gone skyrocket. I'm curious as to what that market's going to do when it turns. But that's St. Pete. I love St. Pete. St. Pete Beach as well. It's an incredible area. Sea Love, I'm getting a little better here in San Antonio. More options available for first-time home buyers like me. I'm waiting, though. Cool. I think that people that are waiting. I mentioned in the video that I did yesterday that, so many people are like, renting is throwing away your money. And I've always been of that mindset. I think that ownership of real estate is a true way to create wealth, especially with your primary residence. If you guys don't know this, your primary residence, and you can take a look at the IRS code, if you own your primary residence for 2 years, you're living there and you sell it, your gain on that is free and clear. You don't pay any taxes. Up to $250 per single, and then for married couple up to $500,000. So it's a great way to create wealth. That's how I've been able to basically capitalize and create wealth, and after become mortgage free very quickly in that scenario too. Erica, I'm in Austin. It's $400,000 for housing in San Antonio. Yeah, it's expensive. Great show you got. Oresta Toka. I apologize if I'm butchering some names here too. Try and live in Canada. Average house is $900,000. That is insane. Teresa, yes, the price range we were looking. We also want to have a great place for a family to hang out before the grandkids are grown. Yeah, that's cool. Again, it's quality of life. You know, it's are you going to start using that property now and enjoy it now? I mean, then you know you buy it. Shams, can you tell us about Minneapolis market, please? You know, I'm going to get some more data for different areas throughout the United States to help out in this scenario for sure. So if you're not a subscriber, consider it too, because I'm going to bring more and more info to you guys. Richard, what's up, man? Appreciate you being here. My dream is to have a condo in Naples, Florida. Don't think it'll ever happen. So expensive now. Naples is extremely grossly overpriced, but I think it's going to come down in value. I mean, Naples is insane. But you know what you have in Naples? You had a lot of people from a lot of rich people going out to Naples and paying really big money for houses and condos. A lot of them were cash buyers. They just had, you know, a ton of money. They wanted to get out of certain states as well. So they were moving to Naples for, you know, working remotely or whatever the case is. So Naples market just got completely insane. Black Media, New Jersey as well. What's up, man? I'm originally from New Jersey as well. South Jersey. Lived in North Jersey too for about 4 years. Freddie Morales just jumped on. What's happening, man? Freddie, I'm in Riverview. What's happening, man? Good to have you here. Another Google user. I'm on Iowa waiting for capitalization housing. Cool. What's going on in Bridgeport, Connecticut? I think Connecticut and Jersey, a lot of the Northeast is just still going insane. Frankie, Jersey Shore. Where in Jersey Shore, man? Is it like LBI? That's where I was at. Under contract in New Jersey Shore for 85 over list price, going to bunk up with the in-laws until 2023. Yeah, that's crazy, man. I mean, anybody that's paying over appraised value, that's a tough pill to swallow, man. I know people are paying over asking price, but if you're getting financing and you're willing to pay over appraised value, that's just not my DNA. Thank you, Amanda. Appreciate it. Have you ever purchased property out of bank shadow inventory? Because from what I understand, these things have stuff all the way back in 08. Yeah, I think that there's a ton of shadow inventory sitting on the sidelines, and we're probably going to see slow trickles. I talked to a local real estate agent that lists a ton of foreclosures, and asked her about, because we went and looked at a foreclosure the other day. It was beat up, man. Somebody went in there and punched holes through all the drywall and everything. It's kind of sad. But I was asking her, and she said that things are still slow in terms of her getting inventory. But she's a player out here, and she definitely lists a lot of them. So I'm going to stay on her. Live in Edison. Okay, cool. My rent is low, under 2-bedroom, 2-bath townhome. I can save $1,300 a month. Save money, guys. Save money, stack money. If you have money in your pocket, I guarantee I'm going to bring you guys through some foreclosures and short sales when the market takes a dump, and you're going to be like, holy shit, that property is now worth. Again, back in the last real estate crash, you know, we're selling properties for $250, $300, and then I was short selling the same properties for $40 and $50,000. If you told me back then that that's where prices would be, I would tell you that you're foolish. Now, it happens. Everything goes up and down. Historically, real estate is always going to increase in value. So if you're holding on for the long term, you're in good shape. But if you feel that you're going to sell in the short term, it's tough. Ocean County, LBI. Cool, man. I was in Cedar Run and Manahawkin. Lived up in North Jersey as well, in Newton, for about 4 years before I moved to Florida. Came out here in 99. Utterly nothing here. I don't know what that means. Sup, Steve? I'm in Los Angeles. Struggle is real right now. When I'm ready to buy, I can't. Yep. I mean, a lot of people are feeling that. John McCain, what's up, brother? Appreciate you being here, man. And welcome to Florida. And you guys got a freaking deal. I know you guys did. We helped you get that deal, right? Tell us about it, John. Tell us about it. I think if you're patient and not frustrated and you're buying in this market and you can hustle a listing agent and really get a strong buyer's agent to help you really pin down that listing agent and say, let's get the deal done tonight before it goes into the next day, you can win. Fed interest rates. The Fed did raise interest rates. Cameron, Brian sold ours without appraisal, sold 3 times the amount we paid in 2015. Nice job. All right, guys. I know everybody is busy here. If you're not a subscriber, please subscribe. I appreciate everybody's time today. We are going on almost an hour right now. Thank you guys so much for being here. Thank you for all the super chats and donations. I really appreciate that. We're going to take a lot of that money and give it to a good cause as well. So I will bring you through those processes as well. And hopefully if this channel gets big enough, we can actually buy somebody in need a house. That would be one of my main goals in the future. So we will save money for that. And as always, I appreciate everybody being here. I really appreciate you guys. And check out some of these other videos in the description below because they are compelling, especially the one on commercial mortgage-backed securities. It's scary. See you guys.